Hi, I'm Cade,
And I'm Bobby.
and welcome to the Newstead Group's Explainer series. Alright, so Bobby, let's discuss the settlement process when you're looking to refinance your loan. How does that work? What could we expect?
Of course. So let's say that your refinance application has been formally approved. Happy days. Good stuff. So the first thing that we would do at that stage would be to instruct your existing lender that you're out of there, you're leaving. So the reason for doing that is that gives your existing lender the opportunity to prepare for a discharge. So they understand that you're leaving, which means they have to prepare to discharge your loan. There's usually a fee involved in doing so, but that's been considered and discussed during the refinance process.
So how do you let the bank know that you're leaving?
So this varies from bank to bank, lender to lender, but usually it's just a form that you have to fill out. Sometimes it's online, sometimes you have to... Most commonly at the moment, it is a form that you have to wet sign and complete, but your broker will help you with that. Other lenders, you have to call them directly and tell them that you're leaving. Other lenders, there's an online form you can fill out. But essentially...
It'll differ between banks.
It does.
Yeah.
But invariably what does happen during this period is sometimes your existing bank will say, wait a minute, why are you going?
Of course.
We're still great. We still love you. And they'll offer you a sharp rate, a cashback, this or that. But 9 times out of 10, the damage is already done. And there's a reason you're going somewhere else.
Yeah.
But some of the main things you have to consider during that period is not just lodging your discharge form with your existing bank, but also signing the loan documents for your new bank. So on those loan documents, some of the main things that you have to consider is, of course, accepting and reviewing and understanding the terms that you're agreeing to, but additionally nominating your, I usually think of 3 things. Your shortfall account, that's where if you do have to pay any additional costs upon settlement, maybe it's accrued interest during that discharge period. So your shortfall account, nominating where those extra funds will come from. Your surplus account, let's say you're doing an equity cash out for renovations, whatever the purpose might be, you have to nominate where those funds go to. So you're just nominating usually an offset account with your new lender. And then thirdly, also nominating the account that the repayments will come from post-settlement.
Okay.
So all of those things, typically the repayment account, that's the easiest one to change after the fact. If you realize you nominated an account and you want it to come from somewhere else, post-settlement you can fix that up. But a lot of the time, that's what you're nominating on those loan documents, one way or another. Varies from bank to bank, of course.
So when do you find out when you're actually settling on a refinance?
Well, that can be tricky. It depends how long it takes your existing bank to discharge the loan.
Yeah.
And it depends how long it takes your new bank to review your loan documents and prepare for settlement.
Okay.
So there's a lot of liaising from existing bank and new bank, but when a date is set, they will meet in a electronic settlement workspace and settle the loan.
Okay. So basically, make sure I've got my loan documents done. Make sure I've got my direct debit repayment set up, if it's direct debit. Make sure I've got my shortfall and surplus accounts in there, if required, and then wait for the date to come in.
Exactly. Stay in close contact with your broker. Sign your loan documents. Depending on the security type, you might have to provide an insurance certificate to say this bank now is the interested party or the mortgagor. And then otherwise, just stay tuned.
Pretty straightforward.
Yeah.